Now, this is one of the most common things that comes up in our Standout PT program. People come to us as they don't understand how to run the back end of their business. They don't understand how to manage their finances. And most of the time we get a little bit overwhelmed, grab the blanket and just pull it up over our eyes and just pretend that it's not there. Now, if you've never sat down with your accountant and actually had a conversation about what's best for your business, and your only interactions with your accountant is when you take your incoming and outgoing sheets to them at the end of the year and they do your tax for you, you're not managing your finances. So that's our goal today, is to teach you what to go talk to the accountant about so you can come from an informed perspective and make really good choices when it comes to your business, maximizing whatever outcome it is you're trying to get from your life, whether it's to show the maximum amount of income so you can live like an adult and get a mortgage and a car and all that sort of stuff, or you want to maximize limiting the tax that you pay. So the first thing you're going to want to do with your accountant that has pretty large implications around things like tax and that kind of thing is just determining what type of business you have. Typically, there's 4 types. So there's a sole trader. It's the simplest structure, gives you full control, but also gives you personal liability. Through lockdowns and all that sort of stuff, it's obviously been pointed out that the sole trader, according to the government, rightly or wrongly, has been shown to not be all that important unless you're turning over well over 75 grand. So something to consider there as well. The next choice, these are in no particular order, is a company. A little bit more complex, limits your liability because it's a separate legal entity. So we're thinking about personal training. We're in an environment where someone could get hurt or sick or injured. If they come after your company, they're not coming after you and your house, etc. The other option is a partnership. So if you're involved with other people, then the partnership might be an option. So made up of 2 or more people who distribute income or losses. And then we have a trust. So a trust is where a trustee is responsible for the business operations. Now, all of these have pros, all of them have cons. It's going to depend on what your specific structure is. If you want to go read more about these, the link is in the bio to the blog on this topic, and there's a link there to the business.gov.au website. You can go straight there and just unpack a little bit more as to what each of these means. Start to get an idea of maybe what's going to be best for you and your business. So once we know what kind of entity we're going to operate as, then we need to start talking about tax. The saying goes, the only certainties in life is paying taxes and dying. Nobody particularly enjoys paying tax, and you should always be aware of how to avoid paying too much tax, maximizing what you can do in that situation. But we also, like I said, need to consider, I've seen personal trainers run for years and years and years with 6-figure incomes, only declaring 25, 30 grand a year to limit their tax. All of a sudden they want to do something adult like rent a house, buy a house, lease a car, and they can't do it because there's no income on paper for them. Also, given the current circumstances with lockdowns and rebates and all that sort of stuff, that's going to put you in a little bit of a hot water. If you can't show that you actually make any income, you're probably not going to be eligible for those grants. So most personal trainers don't really understand tax. Okay, that means most personal trainers cost themselves thousands of dollars a year in unnecessarily rejected from finance applications that an employee of the same income would be approved for, no problems. And that comes down to your financial management. So to effectively manage your business and your wealth, you need to know how tax works. So the most common thing, and if you're a personal trainer and you have a business card, the most common thing that you might say and all your friends and your family say all the time is, it's all good, I can claim it. You can claim that. Awesome. So let's talk about what that actually means. So if you want to buy a nice standing desk like I've got here, right? It's a $1,000 desk. And your immediate response is, that's fine, I can claim that as a business expense. Let's go through how that actually works. So the way a business looks is you have money comes in, so you get paid from your clients and whatever else that you're doing. That's your assessable income. Okay, so your total incoming is assessable income. Then you claim your deductions. So that's expenses and other items that you can take off your assessable income, cost of running your business. Okay, and that's what we're going to talk about with your accountant as to how much of those there are and what you can maximize out of them. At the end of that, you end up with your taxable income. So what the government basically says, you made this much money, therefore you have to pay us this much in tax. So let's say you bring in $50,000 a year of assessable income. So you're getting paid just under $1,000 a week. You have 50 grand of assessable income. Now we're going to get our desk. And that's going to cost us $1,000. So we're going to put in a deduction of $1,000, making our taxable income $49,000. At this income, your tax rate's somewhere around 35% is the tax rate, and that's going to go up and down depending on how much you actually earn. But for this scenario, it's around 35%. So 35% of $50,000 is 17.5, so 17,500. 35% of $49,000 is $17,150. Okay, so we've paid $350 less tax. Okay, so what does that actually mean? Well, it means the desk still cost you out of pocket $650. Okay, so it's cool to say, I'll claim my $1,000 desk. You still paid $650 for it. Okay, so if you live that way, it's a real fast track to putting yourself in a big hole, thinking that this money just disappears because I claimed it, which we hear a lot of personal trainers say. So it's really important to understand how that works. It's really a similar logic to like, it was on sale, so I'd be losing money if I didn't buy it. It's like, we all know that's dumb. It's not a good behavior to have with our finance. It's the same kind of mentality, and we need to avoid it within your business. All right, so now imagine that you wanted to apply for a car or a home loan. For every $1,000 you spend, you pay $350 less in annual tax. Obviously, there's a sliding scale there based on the tax rate, etc. But just to keep this thing simple. The problem is you've reduced your taxable income, the one that the banks actually look at and go, you are or you aren't eligible for finance, by $1,000. So as a result, the bank will lend you slightly less because you're making less. The other catch is income protection insurance. There's always a risk that you'll hurt yourself and unable to be work if you fall ill. Your insurance payments will be based on the income you declare to the tax office. If you aren't open about what you earn, then you could end up in a pretty tricky financial situation if you can't go to work. Okay, so even using all the documents and stuff, like that's going to serve you pretty well for 4 to 6 weeks. Can't work for 6 months. Things start to get a little bit challenging. So the trade-off is knowing what to spend on your business and how much income to declare requires awareness. This is why we recommend that if you have an accountant, they should also be a financial advisor. They should be qualified as both or be seeing both. That way, when you go in, you can make the best decisions for your long-term security with your business and your long-term wealth as yourself. Now, let's not get this twisted and confused, right? Most personal trainers leave the industry because of money. They don't wake up one day and go, you know what? I'm fucking sick of helping people. I'm sick of choosing my own hours. I'm sick of working in a growth environment where everyone's trying to do better in an industry that I love and enjoy, and I get to express whatever I really want in terms of my values. That doesn't happen. People wake up and go, I'm fucking tired. I'm not making enough money. I have no savings in the bank. The bank won't give me any money. I've got a kid on the way, or I want to have a kid. I need a house. Fuck it. I'm going to go get a real job. That's more than likely what happens. So to increase your financial awareness, there's a few terms that you might want to be aware of. So knowing how to make money as a personal trainer is one thing, but you also need to know how to speak money. So then when you sit down with your accountant and advisor, you can actually have a worthwhile conversation. Think about with your clients, right? If you sit down with your client and you start talking about macros and they don't fucking know what that means, puts them in a real disadvantage in that conversation to be able to learn. Some accountants are great, like you as a personal trainer, that will be able to explain and educate them. Some are not. So do the due diligence yourself and put yourself in a position where you're well-versed and you've got solid knowledge. That allows you to then read beyond just the advice that your advisor and accountant gives you. So you need to understand what assessable income is, deductions, concessions, offsets, rebates, and then work out taxable income. Okay, so again, link is in the bio for the blog. In that blog are links to go and understand what all of these things mean via the ATO website. Next step is we want to have a system in place for balancing your books. Okay, so we call that bookkeeping. Keeping track of your business income and spending on a weekly basis. An accountant or advisor who's worth their salt should provide you either with a software or a spreadsheet system or something that's doing this effectively and efficiently for you already. As a blanket rule, we recommend probably using just like a spreadsheet system to track the money you're earning and spending if you're making less than say 50 grand. This should require less than an hour's worth of input once a month once you're good at it. Okay, if you can keep it under that hour, depending on like how much you value your time, then it's probably worthwhile just doing it yourself. Once you tick over that 50 grand, it's probably worth going onto an online accounting platform. We've had experience with Xero, so that's what we're going to talk about. It's really, really effective, and it will equate to anything that's over the 50 grand is probably when you want to switch over to this. So you can connect this software to your bank account and categorize every transaction for easier reference in the future. So it takes you from an hour a month to maybe 2 minutes a week where you're just updating new transactions. The next step would be to hire a bookkeeper to handle it all for you. A lot of accountants will offer this service, or you can outsource it via VAs and stuff for a much cheaper rate internationally. You just want to make sure that you have good communication with the person that you're working with and good trust. So understanding how all of this works is going to be vital for you to be able to hire someone that's international for a better rate. So after all this, I hope you've realized, hey, maybe it's time to actually go talk to my accountant and my financial advisor and figure out what the hell I'm actually doing. 2 things that you want to mention to your accountant / advisor specifically on top of what we talked about today. Work cover. Do I need it and should I get it? Currently in Victoria, the payout, the COVID relief packages are pending whether you have work cover or not, but it's also quite a high bill. Okay, so this whole COVID rebate thing that I've touched on a couple of times today. One thing that people don't realize, and I'm seeing a lot of conversations with personal trainers that, well, I didn't get the fund, I didn't get the grant, I didn't get the rebate. Just remember that just by registering for GST, which typically is what the cutoff is, you're inherently gonna owe $7,500 in GST straight away. So times your income by 0.11, that's gonna be your GST bill. So that is gonna start around that 7.5 grand. If it's 100, then you're coming up closer to 10. So if you're paying $10,000 in GST and you get a $7,000 rebate from the government, you're still actually at a net loss versus the person who's under the GST threshold. So that's something to remember, that you'd actually be losing weekly income via GST along the way, which would have hopefully funded your savings. Okay, should you sign up for private health? That's the other conversation to have with your accountant and advisor. I would also maybe put in there just the income insurance as well, something to think about. Other topics you might want to touch on, paying yourself superannuation. If you're not right now, you should be. So talking to your advisor about that. What can you expect as your next tax bill? If you're not already putting away 35% of your income for tax, then we need to have that conversation of what your next bill is probably going to look like so we can get ahead of it. When to register for GST. So we know that the threshold is 75 grand, but when should you put yourself in the position that you start paying it to avoid that $7,000, $10,000, $20,000 bill all of a sudden rolling in that you weren't ready for? So on top of all this, we want to start to think about budgeting as well. Your financial health and thus your longevity of your business will come down to your ability to manage a budget. Using that GST example, if you were under that threshold, in theory, you'd be putting away more savings than someone who was over. Maybe it's net even because of the income gap, but you would have money put away and put aside for events like this. I'm not going to get into whether it lasts the whole time, the frequency and length of lockdowns. That's not what we're here to talk about. To take control of your budget, something that we use in our Standout PT is something that's based off the Barefoot Investors, The Only Money Guide You'll Ever Need, written by Scott Pape. He has his napkin theory. We've got an evolution of that we've tailored in for people with variable incomes. So get your hands on that book, give it a read. It gives you a great understanding of firstly savings, then things like super, and then starting to actually put together investments and building wealth and stuff as well, which I'm sure as business owners is important to all of you. So my advice right now is, if you're at a generic accountant who's not a small business specialist and who's not a financial advisor, get online, find someone who is. These days you can work with people directly online. We work with a company that's 2 hours away from us. I think I've been in their office twice in 10 years, just because I was in town for no other reason. So you can find the best and work with the best in today's environment and not actually have to have them be your local old mate down at the corner. Find someone that's good, invest in them, go and have these conversations and make sure your business is set up for success. All right, I'm going to leave it there. Don't forget to go check out the blog. Also over to the STC Fit Learning podcast, where we talk all things becoming a standout PT.